You got your first 1099 or maybe your 10th, and you're staring at that income number wondering exactly how much of it the IRS is going to want back. I help freelancers figure out the money side of going solo, and this question comes up more than almost any other. According to the IRS, self-employed workers are responsible for 100% of their own payroll taxes. No employer splitting the bill, which means the effective tax burden on your freelance income is meaningfully higher than a W-2 employee earning the same gross amount. By the end of this video, you'll know exactly what percentage to set aside based on your income level, how to structure a simple savings system, and how to stop dreading April. Why this hits different for 1099 workers. Let's start with the fundamental difference. When you work a regular job, your employer withholds federal income tax, state income tax, and payroll taxes automatically. You barely see that money. As a 1099 worker, every dollar lands in your account. And then it's on you to remember that a chunk of it isn't yours to spend. According to a 2023 survey by QuickBooks, 38% of self-employed workers said they were caught off guard by their tax bill in at least one recent year. That's not a math problem. That's a system problem. And the fix is knowing your real number before the money arrives, not after. Self-employment. Tax. The rate most freelancers underestimate. Here's where a lot of people get tripped up. Self-employment tax is separate from income tax. It covers Social Security and Medicare. And for 2024, the IRS sets that rate at 15.3% on net self-employment earnings, up to the Social Security wage base of $160,600. Above that threshold, only the 2.9% Medicare portion continues. That 15.3% is the combined employee and employer share. When you had a W-2 job, your employer paid half. Now you pay both halves. The good news, and this matters, is that the IRS lets you deduct half of self-employment tax from your gross income when calculating your income tax. That reduces your taxable income, not dollar for dollar off your bill, but it does help. How much it helps depends on your income bracket, which we'll get to next. Federal income tax by bracket. Now layer federal income tax on top. For 2024, the IRS income tax brackets for a single filer start at 10% on taxable income up to $11,600. The 12% bracket covers income from $11,600 to $47,550. The 22% bracket runs from $47,151 to $100,575. Above that, you're in the 24% bracket up to $191,950. These are marginal rates, meaning each bracket only applies to the income that falls within it, not your entire earnings. If you're a freelancer earning $60,000 net, you're not paying 22% on all of it. You're paying 10% on the first slice, 12% on the next, and 22% only on the portion above $47,150. Your filing status changes the math significantly. Married filing jointly has different wider brackets. Always run your specific situation through IRS tables or a tax calculator. State taxes. The variable no one talks about. Federal is only part of the picture. State income tax varies dramatically, and your set-aside number cannot ignore it. According to the Tax Foundation, as of 2024, 9 states have no individual income tax at all, including Texas, Florida, and Nevada. At the other end, California tops out at 13.3% for high earners. Most states fall somewhere in the 3% to 7% range. If you live in a high-tax state and you're freelancing at a solid income level, your combined federal and state obligation could push your effective rate well above 30%. Where you live genuinely changes the formula. A freelancer in Tennessee and a freelancer in Oregon earning identical income will have very different tax bills. Your set-aside formula by income level. Here's the practical framework, and this is the part to screenshot or write down. If your net freelance income is under $20,000 per year, setting aside 20% to 25% typically covers self-employment tax plus federal income tax for most single filers in lower brackets. If you're earning between $20,000 and $60,000, move that to 25% to 30%. That range accounts for the 15.3% SE tax plus the 12% to 22% federal income tax slices, minus the SE deduction. If you're above $60,000 in net freelance income, you want to be at 30% to 35%. And if you're in a high tax state, lean toward the top of that range or higher. These are starting points, not guarantees. Your actual deductions, business expenses, retirement contributions, health insurance premiums, can reduce your taxable income and lower what you owe. The more deductions you legitimately claim, the more these estimates work in your favor. But until you've done the math with your specific numbers, rounding up is always the safer call. Quarterly estimated payments. The deadline that sneaks up. Setting money aside is only half the job. You also need to send it in on time. The IRS requires self-employed workers to pay estimated taxes quarterly if you expect to owe at least $1,000 for the year. For 2024, those due dates fell on April 15th, June 17th, September 16th, and January 15th, 2025. Miss those deadlines and the IRS charges an underpayment penalty, which for 2024 ran at an annualized rate of 8% according to IRS guidance. The simplest system: open a dedicated savings account, separate from your operating account, and move your set-aside percentage every single time a payment hits. Don't wait until the quarter ends. Move it when the money arrives. That single habit removes the temptation and the math all at once. You can pay directly to the IRS using IRS Direct Pay or EFTPS, both free, both online. Before the CTA, one important note. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. For your specific tax situation, work with a CPA who understands self-employment. If this breakdown helped, hit subscribe. I put out practical money content for freelancers every week, and there's a lot more coming. Got a specific tax or money question you want me to dig into? Drop it in the comments. I read them and I build upcoming videos around what you're actually asking. Next week, we're going deep on how self-employment tax actually works under the hood, and the deduction that roughly half of freelancers are missing entirely. You don't want to skip that one. If you want a simple tool to track your freelance income and estimated taxes, I'll leave a link below. It's what I'd recommend to anyone just building out their system. This video may contain affiliate links. I only recommend tools I use personally.